watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that addresses all your stock-related queries. In case you're watching us for the first time, well, there's a WhatsApp number that's flashing on your screens and this is where you can send in all your questions that you want to address to top market experts. Over the next 45 minutes, we will be helping you understand everything and anything that you want to know about the stocks in your portfolio or on your radar as well. Now, we will be welcoming our top guest on the show. We have with us Mr. G. Chokalingam, who's joining in. You've been seeing him. He's been guiding all you viewers through various shows of ours as to how should you be really looking at the market setup. And this is just the right time to get him and invite him on the show, because today is when we are actually seeing signs of recovery in the markets. This is when we want to know whether a bottom has been in place already and what is the next step in the markets that you as investors should be taking. Warm welcome to you, Mr. Chokalingam, and thank you so much for taking the time out for this special edition. We are back above 24,800 and that's a breath of fresh air, because up until morning there was no clear sign as to which way would the markets be headed. Now the question comes in, of course, this is on the back of the Nifty Bank and the recovery in the private banks and the banking space that we are seeing right now. Is it going to be sustainable or is it going to be yet another dead cat bounce? How are you assessing the current market setup?
Yeah, one way this correction is good because, as I have been saying, small and mid cap back were extremely overvalued as compared to Sensex and Nifty. The mid cap P went to even 43 level trading P as compared to 23, 24 for Sensex. So this correction is good. Actually, the Sensex is down 4-5%, but many individual stocks are corrected. The entire small and mid cap pack, if you see, particularly the BSE mid cap and BSE small cap, almost nearly 20 lakh crore got wiped out after Iran attack on Israel. And even today, the pain is there in a lot more in a small and mid cap. This I would consider as a positive sign because particularly the stocks which had a stretched valuations have fallen a lot more. So this has, to some extent, has revived my optimism in the small and mid cap. I think one can now slowly increase the tilt towards small and mid cap after this correction, and I remain, quite optimistic. As far as medium to long term story is concerned, I have no doubt at all. I had only fear in the short term, now which has got reduced. I have been, that's why we have been even initiating a lot more small cap now. So I have become slightly bullish on small and mid cap on a selective basis.
Okay, so that's as far as the overall setup is concerned. We also have a whole host of questions that are lining up for you from our viewers, sir. So let me just do a quick hi with all our viewers joining in live on the show. On our YouTube platform, we have Anuj Singh, Sandeep Pancharya, Mohit Yadav, Ankur Modi, Kamlesh Narkhede, Priya Darshini, Soumya Raut, all joining in. Warm welcome to all of you. Good to have you with us on this special edition. And I'm sure that all the questions that you have already started to write in, you will get just the right advice from Mr. Chokalingam on the show. Okay, so let's start off by taking the first question. This is from Anuj Singh. He wants to know on Nalco. Now, what he's saying is that he's bought it at the rate of 153 and he's already holding up about 50% kind of a profit on Nalco. He wants to know, should he be booking out some of his profit right now? What should he be his strategy on Nalco?
On every rise, this could be a sell, Nalco, because despite massive stimulus from China, the oil price is cracking. It is almost two-thirds of the gain post Iran attack is being wiped out. There is a fear that the Chinese economy may not pick up the way we expected, and that is very crucial for metal stocks, and which is very amply explained by the oil price. It has corrected a lot in the last 1 week. So I believe, entire commodities, including aluminum, copper also, they are likely to correct. So therefore, I would maintain a sell call on Nalco.
Okay, got that. So that's what the advice is coming in for you. So hold that thought right there and keep your strategies the same. Let's get in the next question. This is from Sandeep Pancharya. He also wants to know about a stock which is in the same category, the metals and the mining space, Vedanta. What is your thought process here? He wants to know whether a fresh entry is advised into this stock.
I would prefer, considering the balance sheet and the management quality, Hindalco is always a superior stock to Vedanta. So my preference is Hindalco. On any further small decline also one can consider Hindalco rather than Vedanta.
Okay, got that. So that's the view that's coming in. Okay, we have another question that's coming in on our WhatsApp number. This is Sumit Goyal, and he writes in from New Delhi, sir. He wants to know which stock could be better between Indegene and Mankind Pharma, and also if you could suggest for a 1-year time horizon, what could be the right entry price point? Indegene and Mankind Pharma. What looks good to you, sir?
I studied IndiG yesterday. I am not comfortable with the valuation.
Okay.
For that matter, Mankind Pharma also at exorbitant, but then there is a one safety, being a pharma defensive. I am sure it would continue to grow. So therefore, the valuation multiple can shrink better than IndiG. So I would, between these two stocks, I would prefer Mankind.
Okay, Mankind is a better preferred one. I hope that has answered your question. Next, we have a caller with us on the phone line. So, let's start to speak with him. We have Sandeep Thakur from Deoghar in Jharkhand who's called in. Hi Sandeep, good afternoon. कैसे हैं आप?
नमस्ते मैम, माय क्वेश्चन जीटीपीएल हार्डवेयर नेक्स्ट 3 मंथ टारगेट
3 months के लिए GTPL Hathway. You already have the stock 177 इनका परचेज प्राइस है. मिस्टर चोकलिंगम क्या सजेस्ट करेंगे? 157 पर आ गया है. दैट मीन्स ही इज हैविंग अ 20 rupee लॉस ऑन पर स्टॉक दैट ही इज होल्डिंग ऑन टू राइट नाउ. ही हैज अबाउट 200 शेयर्स.
3 महीने के मैं देते नहीं है रिकमेंडेशन. मेरा कॉल्स कम से कम 1 साल से 3 साल लगेगा. सो आई एम सॉरी, मेरे को भी नहीं है 3 महीने.
ओके गॉट इट. एक लॉन्ग टर्म का नजरिया दे दे.
Long term, definitely GTPL Hathway is a good stock for long term.
ओके 3 मंथ्स के परस्पेक्टिव के लिए तो हमारे गेस्ट आपको यहाँ सलाह नहीं दे पाएंगे, लेकिन लंबी अवधि के लिए अगर आपका एक नज़रिया है तो डेफिनेटली एक अच्छा स्टॉक है. आप इसको लंबी अवधि के लिए होल्ड करके रख सकते हैं अपने पोर्टफोलियो में. चलिए अगला सवाल लेते हैं. वी हैव द नेक्स्ट क्वेश्चन. दिस इज फ्रॉम okay, Mohit Yadav, interesting question. Vari Energy's IPO that's about to open next week is what he's asking on. What is your view on this one? This is one of the most anticipated IPOs in the renewable energy space that is about to come in. Have you already studied some of the prospects right there, sir? What would your suggestion be?
I do not have a fundamental comfort, but then all these companies, if you look at Vari Technology, Vari Energy, all these stocks are given on listing phenomenal gain post listing. So if investor is a speculative short-term trader, yes, this IPO one can apply, provided they also have a little risk appetite.
Okay, got it. So that's the view that's coming in right there. We have the next question. This is from Kamlesh Narkere, and he says, "Hi Sakshi, Trent and Bajaj Auto is what I want to know on. I have a long-term view. Can I buy any of the stocks at the current levels?" We do know that both of these stocks have had a stellar run in the past. After the earnings, Bajaj Auto has seen a sharp correction as of yesterday, and Trent is also slowly and gradually coming off the peak that we have already seen for Trent. Sound fundamentals, leaders of their own sectors as well. What would your suggestion be if somebody wants to take a fresh entry for the long term?
In both, I have concern about the valuation, but since the viewer has asked my research between these two, Bajaj Auto would be better than Trend for the long term.
Okay. Bajaj Auto will be better than Trent at this point in time. In case you are looking at for the long term within the auto and the two-wheeler space, you can go for Bajaj Auto right there. Okay, let's take the next question. And this question is again from one of our viewers on the YouTube, Priyadarshini. She says that, is it the right time to invest in TCS? Now, we do know that the IT companies have been reporting their earnings. Nothing spectacular or on a surprising note has actually come in from either of the IT firms. In fact, we've actually seen most of these firms decline after the earnings too. Your own sense on the leader of the pack right now? Of course, we have a lot of factors at play here. In November, we'll be looking at US elections. Interest rates have already started to decline as well. How are all of these factors going to be impacting a leader like TCS right now?
If investor is looking for a defensive bet, yes, TCS is one of the best bets in the large IT space, no doubt at all. But if investors are looking for a kind of wealth, TCS has created in the last 10 years to be repeated, my fear is that it is almost impossible. Not only from TCS, from any of the large cap stocks, all of them will be only defensive because the industry has seen contraction in the growth rate after the base has exceeded $125 billion. it's going to be very difficult for them to grow in double digit. With AI coming in, we don't know what kind of impact it will have on IT services, but certainly, at least for 1 to 3 years, strong double digit revenue growth in dollar term is almost impossible for the industry. So therefore, one should have this perspective. If you are looking for a defensive bet, yes, in this market, this is one of the best stocks. But if you are looking for wealth creation, probably you can look at small cap stocks because the industry is growing in poor single digit in dollar term. There is a possibility of more consolidation involving small and mid-sized IT companies that would improve the valuation. So therefore, we have come out with a recommendation on Birla Soft. That's our strong bet within the small and mid-cap IT space.
Okay, got it. Let's take the next question then. Soumya has written in. She says, good afternoon. I want to know on Bharti Airtel, is the bottom out still in a balanced shape? So I think she wants to know whether the stock has bottomed out. Will it again start to move up now? Bharti Airtel, flattish right now today. 1700 is the current level. What would you suggest within the telecom story?
It is a best story along with Geo Mobile, but you can't directly play on Geo Mobile. You have to take a little burden of oil and gas segment also. So therefore, standalone telecom, this is the best. But then the price has already shot up, and also we are seeing these FIIs selling continuously happening in the large cap space. So therefore, my apprehension is that in the short to medium term, it may not give much return. But somebody looking at a 2 to 3 year time frame, then it is definitely a hold and buy on decline also.
Okay, got it. Let's take the next question. This is from a WhatsApp number that we have received a query from one of our viewers. This is Srinivas Rao from Hyderabad, and he says that I have purchased Man Industries at 400 and the current price is around 320. Can I hold for the long term or should I exit? What will be the viewpoint on this one? Man Industries currently at 324, 1.4% higher in trade. Any suggestion here?
I'm sorry, I do not track this particular company.
Okay, no worries. We'll take the next question with you. We have a caller now, I think, with us. Shiva is with us on the phone line. Namaskar, Shiva. कैसे हैं आप? कहाँ से बोल रहे हैं?
Hello, ma'am. Good afternoon. Myself
Good
Shiva
afternoon.
from Andhra Pradesh, Vijayanagaram.
Okay. Welcome.
I want to know, I recently invested in Canara Bank at 112 rupees for 1,000 shares.
Okay.
I want to know the current shares. Can I hold for the long term or can I book the profits and exit the shares?
Sure. We'll get you Mr. Chokalingam's view here. The stock is trading at 103 level and you bought around 112 odd levels. We do know that there was a time when all these PSU banks were in the pink of their health and in a dream run sorts. But after the budget and after the election, the space has been a laggard and absolutely lackluster or long time based correction is being seen across the space now. But for somebody holding on with the long term view, should one continue to hold on, add afresh or look at some other space? What would you suggest, sir?
Certainly, if somebody has a long-term perspective, Canara Bank, no doubt, it's a good bet for the long term. Even on decline, this will become more attractive. However, one should know the fact that the PSU banks are always cyclical in the last 20 years. They have gone up to 2 times the price to adjusted book value, then they fell up as low as even 0.5 times price to adjusted book value. Now, but Canara Bank also corrected, it's a fairly priced now. But short term, one may not make big money in PSU banks, including Canara Bank, because there are a lot of headwinds like moderation in the credit growth, moderation in the low cost deposit ratio, the need to reduce the credit deposit ratio in the industry, need to provide provisions for expected credit loss. So like this, there are so many headwinds playing out simultaneously. Therefore, in the short term, one may not make money, but certainly it's one of the best PSU banking stocks for medium to long term. That is for a time frame of 1 to 3 years.
Okay, got that. So I hope this has answered your question too. We have Abhinandan from Bagalkote also writing in. He says, I have purchased 300 shares of Ola Electric at the rate of 88 and Bajaj Housing Finance at the rate of 132. Is it the right entry level for me, or what should I do going forward? Ola Electric, we do know, has now been reeling under some consumer facing issues that the company has been consistently dealing with. They've also onboarded EY to deal with the customer relations issues and the problems that have been coming in for. And Bajaj Housing Finance, we do know, is a recently listed stock from the Bajaj fold. After 3 decades, it came in the housing finance name. Between these two new entrants of the stock markets, how would you assess?
I would give my research view, but before giving my research view, I want to caution the investor that please take your own call, because of late the market gives more role for PE rather than EPS. That is, fundamentals.
Yeah.
The perception-driven PE plays a major role in this bull market because of entry of a lot of young investors. So fundamentally, I do not have a comfort in both Ola Electric and Bajaj Housing, because Bajaj Housing still trades at more than or around 6 to 7 times price per adjusted book value. I feel, which is extraordinarily stretched in valuation. And Ola Electric, in my rough calculation, if somebody has to make money in 2 3 years, it has to turn around and it should make at least around 1,500 2,000 crore profit in 2 3 years, which I doubt whether it is possible, because this space is getting crowded. However, risk to my view is that if small and mid cap space see a massive bull run, these two stocks can run up purely because of perception driven PE rather than the earning I have mentioned.
Okay, I hope that has addressed your understanding of how you should be really looking at Ola Electric vis-a-vis the current spaces as well, and how it is placed at the current levels. We'll take the next question. This is from Abhinav from Amritsar, writes in, I have 100 shares of Indigo Paints at the rate of 1500. Should I accumulate more or sell at the current levels? What would you advise him, sir? We've seen some portion of the crude oil price cut getting in the positive zone for all the paint companies, because they use crude as the derivative right there. Is Indigo well placed at the current levels?
Yeah, one can hold. They have reasonably done well. And as you rightly said, paint companies use derivatives of crude oil. And as I mentioned, crude oil prices have crashed 20% from the 52-week high. And I have a view, I may be wrong, that if Israel, the war in the Middle East moderates, oil price will crash much more, very badly. That would be positive for paint companies. So therefore, I have a cold research view on Indigo paints.
Okay, got that. So that's the view that's coming in. Okay, let's take the next question now. This is from Kavya. She says, hello Sakshi, how are you? I'm very well, Kavya. I hope the same for you too. She wants to know on a few stocks. One is SW Solar, again from the renewable energy space. She has been holding the stock since the price of 526. Now she wants to know, should she book out profits, because it's now trading at 631. And the other one is Tata Motors. What should she do at the current levels here?
Tata Motor is a great company, but right now the passenger vehicle segment, the commercial vehicle segment, both are going through tough time.
Yeah.
I believe it will take at least couple of quarters before we see any turnaround in the growth rate of these two automobile segments. So I have a research view of sell call on Tata Motors, and the second one is
So the second one is SW Solar.
yeah,
It is from
England
yeah.
I studied the results. Though standalone not doing great, at consolidated level it has done better. But I believe the earnings, even at consolidated level, do not justify the current market price. And therefore, I maintain a sell on Sterling and Wilson Solar.
Okay, got it. Let's take the next question then. This is from Rekha Tupe. She wants to know on Geo Finance. She has 330 shares at the 200 rupees price tag. Now, the company will be reporting its numbers also today. Your own sense on Geo Finance, sir, what would you advise?
In fact, we have a research coverage on geofinance we have been recommending ever since it debuted on the stock market, and we have been extremely bullish on this counter for medium to long term. Yes, today the result is there, but I don't have a great expectation because the company is still in the building stage. It's a building a conglomerate of financial services. It's not just a financial service company. You imagine any vertical, it is trying to build the business. And after seeing a great success in building telecom from the scratch, retail business from the scratch, I have a strong faith that the management will build one of the biggest or the biggest financial services company in the country. So therefore, I believe that this is a phenomenal wealth creating stock for medium to long term. So we continue to maintain a buy recommendation on Geo Finance.
Okay, got it. So that's the view that you have now on Geo Financial Services. We have a caller next with us. Nand Kumar has dialed in from Coimbatore. Hi Nand Kumar, good afternoon. How are you and what's your question?
Good afternoon. Hello to you. And I'm a great follower of Mr. Chokalingam. For the last 10,
Okay,
15 years, when he used to appear on various channels, and he's very
wonderful.
honest confession. And I think he has been recommending MRF from the price of 35. Today it's about 125, 29. It is still, that is still hold promise for up to 160, 1 point. And Bosch also, I have bought Bosch at the average price of 18. Today the price is around 38. I want to know the future prospects, whether I can still hold amount.
Sure, absolutely. Great to get connected with you. Mr. Chokalingam, your follower from a long time, 10, 15 years. Nand Kumar wants to know, one on MRF, he's been following your advice, but he wants to know now that the stock has the recent downturn come down a bit. Does it still have the potential to retest 1,60,000 odd levels? And the other one that he wants to know on is Bosch, where he's been holding at 18,000 odd levels. What is the future?
Yeah. First of all, my sincere thanks to him for the appreciation, kind words. Coming back to MRF, we successfully closed the call, but we reinitiated our recommendation around 1,000, 1,60,000 target. I firmly believe that in the next phase of growth, this stock can even go to 2 lakh, but I would be conservative around 160. Of course, the September results will be little bad for MRF because the rubber price hit a lifetime high in the month of August. But interestingly, this kind of trend I have not seen in the last 20, 30 years. The domestic natural rubber prices started crashing from September. It's very interesting to know that domestic natural rubber prices have crashed 51,000 rupees per ton from 2,47,000 to yesterday 1,96,000, which is a big positive for tire companies. Among all, I prefer MRF because it's a leader, there's excellent management, and is sitting on net cash. Perhaps this is the only company to sit on a net cash. And also, if you look at the capital work in progress as on March 31st, 2024, almost the pending capex is half of the entire grass black or net black, which the company has reported for over 60-year period in a cumulative sense. So there's a big expansion happening. And also, this company, like other industry players, they depend on 70% of the total sales for replacement market. So though OEM business has been affected in the automobile sector, the replacement demand will not affect. And I see a phenomenal turnaround in October, December quarter results, though the September results could be bad. So investors can consider the September results to accumulate the stock, and I am extremely bullish on that. Wash, certainly, what is happening in the automobile sector will be slightly negative. So short term there are concerns, but definitely medium to long term, this is good to hold.
Okay, short, medium term to long term, they are good to hold. That's the view that's coming in right there. Let's take the next question. This is from Namita Arora. She says, hi Sakshi, how are you doing today? Very well, Namita. Thanks for asking. She says, when will Adani Power and Jupiter Wagons start moving? I'm in huge losses. Mr. Chokalingam, could you help us understand here? Adani Group as a whole has been lackluster of late. This is despite the group companies going in for fundraisers as well. We are yet to see the earnings to see whether there has been some more promise delivered right there. But on the other hand, railway space has been another laggard, and Jupiter Wagons, which was the erstwhile outperformer, is now incurring a lot of losses for investors who've been holding at higher levels. What would you suggest?
Adani Power, yes, it is true that it is the enterprise value per megawatt is one of the costliest stocks. But the way they are scaled up, if investor is willing to hold for 2, 3 years, definitely one can make a decent return. So it's a hold for a long term. And the other one is the railway company wagon,
Jupiter Wagons.
Peter wagon. I don't have a valuation comfort. Only my suggestion is that all these railway related, these kind of stocks, they play out in a thematic way. So one should be very shrewd enough to buy, before the story plays out. One should avoid buying at, lifetime highs, because if you see last 20, 30 years, even including, unfortunately, some of the PSUs, they always have a cyclical pattern of 3 to 5 years. They crash and then they come back again, they crash. So I don't have a valuation comfort, in holding Jupiter balance.
Okay, so difficult time right there, Namita, for you. You will have to really assess the situation. Probably, if you have a very long-term horizon, will have to have a lot of patience. At the current levels, the valuations still give a little bit of discomfort right there to Mr. Chokalingam right there. Thank you so much, Mr. Chokalingam, for being with us on this special edition, helping all our viewers assess their situation on their stocks and giving them the right strategies. Always a pleasure to host you. Thank you so much for being with us. Well, the Nifty is now 100 points higher in trade. So what a sharp recovery is what we have seen up until the half time of the markets trade today. Finally, after 4 days on the last Friday, it's probably turning out to be a Friday of sorts. 24,850 back with the Nifty. We are at the highest point of the day. A 0.4% of an uptick is what we can see. Time now to welcome another guest on the show who will be addressing all your stock queries. We are now joined by Mr. Kranti Batini, Head of Equity Research at Wealth Mill Securities. Warm welcome to you, Kranti sir, and thank you so much for taking the time out. I hope that you are doing very well. You had met with an accident, and thereafter I hope that you have recovered. You got some fractures as well on your elbow. So I hope that you are really taking care of yourself and are feeling better.
Thanks, Sakshi. I'm feeling better on a recovery way.
Okay, wonderful. The markets seem to be in the same way too, recovery mode, and I hope that they get into a festive, cheerful mood. As much as the spirits are high, the festive cheer was missing from the markets. What's your own sense, sir? Do you think the bottom is now done and we are now on an upward journey? Does that look positive?
Sakshi, there are a couple of points. Markets are in a paradoxical situation at this point of time. We have global uncertainties that have been looming and creating uncertainty on the markets in the medium to short term. But overall, the global equity markets are in an uptrend, but the short-term blips are still there. For India, right now, we have a double whammy. One is the rising global geopolitical issues, and also the crude oil has been right now it's in a comfortable level. Any upward trend in the crude oil prices that can disturb the party for Indian markets. And also what the other thing is, there is a phenomena right now going on, sell India and buy China. So this is the norm that has been creating some kind of selling by the foreign portfolio investors. But thanks to the domestic strong liquidity flows that has been salvaging the markets at this point of time. And also we can sense at this point of time some kind of softening of the growth at this point of time. Really, we don't have any kind of real earning positives at this point of time. We don't witness it till now any kind of upgrades with respect to the results are concerned. So some kind of softening and consolidation we are witnessing. But Sakshi, for the matter of fact, this kind of consolidation is much needed for Indian markets, because whenever there are excesses, whenever one need a better shape for the market, so we need to burn the excesses. So always burning the excesses is a painful process. So what market has been doing last few days and from the last fortnight has been that burning the excesses. So still there are opportunities, but we can see a stock specific opportunities are still there in Indian markets. But definitely for a medium to longer term perspective, any dip on Indian market is a warranted buy for the investors for a medium to longer term perspective. We have witnessed a sharp recovery now, but going ahead, what we can sense is one need to closely watch how the geopolitical issues that are taking place that are going to pan out, and also the crude oil. These are the things one need to keep on their watch list.
Okay, let's start off by taking all the questions of our viewers now, sir, for you. A lot of questions are lining up. We have a caller with us from Muzaffarpur. Avnish has dialed in. Hi Avnish, good afternoon. कैसे हैं आप? क्या सवाल है आपका? Avnish, क्या आप सुन पा रहे हैं? जी
जी मैम।
पूछिए।
मैडम पीसी ज्वेलर पर सर ने बताया था आप ही के चैनल पे,
हम्म।
जो ये 187 के बाद फिर से 140 गया था, उसके बाद फिर रिकवर आया है, तो ये 200 तक जाएगा, तो फिर ये आज लोअर सर्किट मार के फिर ट्रेंड में चल रहा है, तो इस पर थोड़ा व्यू चाहिए मैम।
ओके 169 पर खरीदा है आपने, जो आपका एवरेज प्राइस है पीसी जूलर्स का। मिस्टर पतिनी, वी डू नो दैट गोल्ड प्राइसेस आर एट record high levels, and with this onward journey we've actually seen a lot of these gems in the jewelry space stocks come in the sweetest spot and are shining brightest, especially for a PC jeweler which has been an erstwhile bed destroyer. This year has been fabulous with the way the recovery has happened. Let's pull up the long term chart, let's pull up the last 6 months chart for our viewers to see. Today of course there is a downtake about 3% the stock is at 180 odd levels, and the good part is that it is still higher than the purchase price of our viewer who's bought it at 169. So you can see a 230% kind of a move in just the last 6 months alone that investors have actually seen. Now what is the view here, sir? Do you think for somebody holding at 169 odd levels should hold on or should they book out?
Sakshi, with respect to the PC jewelries is concerned, there were some kind of corporate governance issues and the performance of the company. But right now, what, as you rightly mentioned, today the gold, the safe haven touched 2,700 dollars per ounce, okay, which is a very positive for the these gold companies. And in fact, if you see the last 7-8 months performance, last 2 quarters performance for all these the jewelry stocks, they have been skyrocketed and they have been outperforming. And PC jewelry is also not exception. The stock also participated in this rally of these jewelry stocks. If the investor is a medium to short term investor and taken a trading position, I'll educate him to book profit from the table. There are much more better quality stocks are available in the universe. There is a lot of speculation around this stock, and stock tend to behave in a speculative way. I educate the investors, given the kind of current market conditions are concerned. PC jewelries, he can book profit.
Okay, got it. So that's the view that's coming in. Let's take the next question. This is from our viewer Abhishek Kumar. He wants to know which level can I enter Bank of Maharashtra at. We do know that these PSU banks have had a stellar run in the recent past, but they are in a consolidation mode. Is Bank of Maharashtra still looking positive for a fresh entry, sir?
Yeah, Sakshi, they recently had a QIP. So if the investor is a serious long-term investor, the fundamentals of the company has been doing good. And so this is a good level for him for enter at this point of time. But the strategy now to take any entry, it should be in a staggered manner because markets are volatile and also looming uncertainties around us. So one can start buying at this price point, and any decline he can further add.
Okay, got that. So I hope that has answered your question too. Let's take the next question. This is a question that is coming in from Ashwini Rao, and he says, is it the right time to buy Cipla or should we expect some more downside on this one as well? From the pharma pack, Cipla, how would you look at it, sir?
Stock, after recently touching all-time high of 1700, what we are witnessing is some kind of profit booking and consolidation in the recent last fortnight market carnage, what we witnessed. Any dip from this level, I can see the stock have a strong support zone around 1500. So this is the first point, price point for the entry. So the investor can enter at this price range in a staggered manner. Still, we are quite optimistic with respect to the pharma space is concerned. In fact, this year, the pharma index has been outperforming index at this point of time. So one can add names like Cipla at dips actually.
Okay, Cipla could be added on the dips. Hardik Patel wants to know on BHEL. He's bought, the stock, and he wants to know what should I be doing. I think at 400 odd levels is where he actually took an entry on BHEL.
BHL 400 levels?
Or
Yeah.
282 levels probably, or 400
Okay,
levels.
okay,
That's
okay.
he's mentioned
Yeah,
both
yeah.
levels, but I could not get which level is he
Okay, okay.
asked.
So actually, he can hold on to the stock, the results of the company, and the results have been improving for BHL. At this point of time, he can hold on to BHL for a potential upside from this level also for 15 to 20%.
15 to 20%. Okay, Hardik, I hope
Yes.
that has answered your question right there. Let's take the next question. This is from Satyanarayan Rao Kulkarni. He wants to know, he says, good afternoon. Please suggest one or two two-wheeler stocks for the next 3 to 6 months. Now, we do know that at least a month back, Mr. Patini, this auto space was in the thickest of action, was driving in the fastest lane. It was among the favorite spaces to be in. But come 1 month later, closer to the festivities, the earnings are coming in more, on the lower side than expectations. There is also a management commentary which points out to a muted festive demand as well, especially what we've seen is with Bajaj Auto, what happened yesterday. But do you still believe at the current levels one can go for a two-wheeler stock for the next 3-6 months?
Sakshi, two-wheeler stocks are at an inflection point right now. And the EV space also coming to dominate. So we have a broad range of EV as well as the regular ICE makers are concerned, OEMs are concerned. We have, the other hand, Ola Electric, after giving a stellar returns, the stock corrected from its peak. Now it's nearer to the listing, the IPO price. So there are a dichotomy with respect to the two-wheeler space are concerned. If the investor is really a long-term investor, continue despite of the recent numbers. One need to have a trailing stop loss for Bajaj or TVS, and he can add these stocks for a 3 to 6 months perspective. Definitely, we can see some kind of revival in the numbers. We still have some time to go for the Diwali. Numbers should go up, but the dichotomy right now is the investors, the consumers, they're at a point where to decide about go for ICE or Bajaj has CNG, and also whether to go for electric, which is much more widespread. That's what the dichotomy at this point of time. But really, for a longer term investors, these are proven strong business models. Probably just a 1 quarter perspective, they might disappoint, but these are the strong business models. One can add these stocks on a longer term perspective.
Okay, got that. So I hope this has answered your
And in
question
fact,
too. Yes.
Sakshi, just to add the point, Bajaj has one of the performance. The stock has given 70% returns during the year. So these
Right.
kind of market conditions and the commentary, so tend to see these kind of blips also on the stock.
Okay, right. Let's take the next query then. Vinod Chaudhary has written in. He says, hello Sakshi ma'am. Thank you so much for doing this show for all of us retail investors. Many thanks Vinod for writing in, appreciating our show. I hope that this show is able to help you out with the right strategies in the markets, and you're actually looking forward towards profitable trades and investments. He wants to also know on one of his stocks in his portfolio, Archean Chemicals. He's been holding on to this stock and at around 640 rupees is what he has bought this. He wants to know, can he average at the current levels? He has a long-term view on the stock, Archean Chemicals.
Yeah. Sashi, with respect to the Archean Chemicals is concerned, okay, the stock after touching a high of above 800 levels, what we are witnessing is some kind of profit booking. Do witness the stock is in a positive zone only at this point of time. Most probably, he can keep this price point and he can try to average at this point of time. Okay, he can since he's a long-term investor, better to take the position post results. Okay, that is the best entry point for the investor at this point of time. Just wait for the for these companies, because the worst is yet to behind for these companies, most of these chemical companies. But Archean is one of the finest company among the chemical pack is concerned. The valuations also at this point of time looks attractive for the company. So wait for the earnings, and at the time of earnings, after looking at the earnings, most probably you can take the position in Archean Chemicals are concerned.
Okay, got that. Well, we'll take the last question with you, Mr. Batini, on the show. And this question is from the IPO space. The question is on Vari Energies IPO. And Mohit Yadav wants to know what is your view here. Should one be looking at subscribing this IPO? The IPO opens on Monday. And this is another one of the renewable energy names that is on the radar of a lot of investors who are looking for newer opportunities in this space. Have you assessed Vari Energies thus far? And does it make for a good proposition?
Sakshi, right now what we are witnessing is from the last fortnight, there is a change in the sentiment of the primary market is concerned. And we witnessed how the Hyundai, the largest IPO, they could able to sail through and the lukewarm response what the IPO received in the retail portion is concerned. So right now, if the investor is a serious long-term investor, okay, he can subscribe, and also you should not expect any kind of listing gains and also the buzz of the gray market premiums and all. So just wait and post listing, okay, he can increase his holdings at this point of time. With respect to the listing gains is concerned, the market sentiment and mood of the market will decide. Despite of the Hyundai Motors strong fundamentals, but even the QIP portion got subscribed, oversubscribed in fact, but the retail portion is undersubscribed. Yes. So the change in the mood right now, the sentiment is different right now. So I advocate the investor just wait for the anchor book, how it's going to pan out. Most probably you can subscribe for the IPO.
Okay, I hope this
but not for the
your
listing
question.
gains.
Not for the listing gains, Mohit. That's very clear. In case you have a long-term vision, then you can definitely look at it, because a lot of factors will be at play, including the market sentiment on that day when the company lists will be very important to judge too. Many thanks, Mr. Batini, for being with us on the show and helping our viewers understand strategies on the key stocks and the doubts that they have. Thank you so much for being with us. And since we've been talking about the IPO space, and even Mr. Batini talked about Hyundai IPO, the lukewarm response there, but the IPO did manage to sail through on the final day thanks to the QIB portion. But what does it really mean for you if you have already applied for this IPO? Will you actually get the IPO allocation? Will a 50% subscription in the retail category guarantee your allocation to you or something or not? Then we will try and to assess this a little bit more. My colleague Pawan Nahar is with us. He's assessed a few situations and he's going to be helping us understand as to what could be the chances for you in case you have applied for the Hyundai IPO in terms of allocation right there. Pawan, take it away.
So, good afternoon, Sakshi. Hyundai's IPO, which was open for bidding between October 15 and 17, so it barely managed to sail through, and the issue was overall subscribed 2.37 times after the QIB push, where the QIBs subscribed 7 times for their allocation, while the HNI portion was undersubscribed by 40% because it was booked 60%, and retail it was a mixed bag because 50% was booked and 50% was not booked.
Yeah.
So so there's a catch that it does not guarantee you the allotment of shares. This is because the applications which are made below the cutoff price will stand invalid, they will be cancelled out, and there will be no allocation for those investors who have applied below the cutoff price. So as of now, the information that we have, the cutoff price is the upper end of the price band, that is 1960 rupees, and according to the data, if we see, then applications in the retail category, applications for more than 4,24,000 lots, they are in below application size, and even in the employee category, which was subscribed 1.75 times, so more than 23,000 lots are invalid and they are below the cutoff price. So yes, even the undersubscription does not guarantee you the allotment if you have applied below the cutoff price, and that is what, and the remaining portion that from the HNI and retail category, that will be given to the QIB category, which is oversubscribed because they have applied at the higher price band, and the allocation will be made on the higher end of the price band only. That's all from my side, Sakshi.
Okay, got that. So despite the retail portion getting subscriptions, only 50% of the whole portion that was given up for the IPO allocations, it does not guarantee whether you will actually get the allocation, but check on all of these points that Pawan has highlighted. If you've definitely kept the cutoff price as the upper end of the price band, then you could actually hope for getting one, and all the other factors that have been highlighted right there, so that at least you get eligible, and then we will be able to see what is actually the allocation rates then when we finally get to see the allotments done. Well, thank you so much, Pawan, for highlighting all of this for us. So we'll just now wait to see how the listing of Hyundai IPO really takes place. It's definitely sailed through, but the enthusiasm was definitely missing from the retail and the HNI side. We'll have to see whether the listing gains really make up for most of the lost ground in the IPO space. Thanks a lot for joining in onto this special edition of Daily Calls, viewers. We hope that we were able to address a lot of your questions today. Do mention on the comment section as to how are you finding the advice given by the top market experts on the show, and you could also send us our feedback as to in case there are more things that you want us to cover in the Daily Calls edition as well. But we'll see you Monday now at 12 noon. In case some of your questions have been left to get answered, send them to us on the WhatsApp number that continues to flash on your screens, and we'll start taking them from Monday too. Many thanks for joining in. I hope you have a fantastic time ahead.
All about the India Mobile Congress's coverage. Business Today TV is at the heart of it. And of course, the coverage of the IMC cannot be completed without speaking to a global conglomerate like Ericsson. And of course, I'm joined by a very special guest here, the CTO, Mr. Eric. Thank you, Eric, for joining us at